Hi, and welcome to Financial Detox. I'm Jason Labrum in the Intelligence-Driven Advisors Financial Detox studio today. We have a special guest in studio. As normal, though, we have Alex Klingon-Smith. Hi, Alex.
Hi, Jason.
How you doing? And we have Clay Willits. Clay Willits is a CPA who is now an in-house CPA for us here on the Financial Detox team at Intelligence-Driven Advisors. Clay, this is your first appearance on the big world-renowned show, Financial Detox. How you feeling?
I am feeling great. I'm glad to be here.
You're nervous.
Only if you say so.
Yeah, that's the way you don't say that to somebody.
He's not nervous at all. Clay's a stud. And been a CPA tell us a little bit about you as a CPA, because today we're going to talk about on the show integrating and closing the circle of advisors when your CPA and your financial advisor work together, and how beneficial that can be. We're going to talk about some year-end tax planning strategies, but you have a really great pedigree and a long history of helping people with taxes and whatnot. So give us just a quick intro, if you would.
Well, you can certainly tell I've been around a while, and got my CPA in 1984 in California, and worked in public accounting and tax and financial statements, etc., for several years, and then went back into private industry and got many years as a chief financial officer in some various industries. And then this last part of my career, for the last 18 years, I've been back in public accounting as a principal, working with small and medium-sized businesses and individuals in tax and business planning.
Awesome. Thanks for being here.
Thank you.
So, Alex, Financial Detox and taxes, this has been a big thing for us as we are the Financial Detox team at Intelligence-Driven Advisors. We have a show, we have the radio show, but I'm sorry, I lost my train of thought. We have, for a long time, wanted to incorporate tax planning as part of what we do, because we do a lot of financial planning for our clients, which we think is critically important. And all the shows we do, that's where I was going, all the shows we do, we talk about financial planning and how that is really the hub of being a successful investor. Is you have to kind of understand your purpose and understand what you want to do, but then incorporating the tax aspect of that and providing like a one-stop shop for clients where their CPA and their financial advisor are working together and working cohesively. It's pretty sweet.
There's a huge benefit when your advisor will collaborate with your CPA. And what we've done recently with joining forces with Clay and his team is to bring it in-house. And I think the biggest difference, we're going to talk about more today what that really means. I know we do a really good job with all of our 1,000 clients of making it part of the normal review agenda. Taxes is a part of your financial plan. And we do tax planning. We try to look forward really far, and we always bring the CPA into the loop when possible. Because some people don't have CPAs. Some people's CPAs aren't as cool as Clay, and they don't respond, or they don't really have the time even. And that's really it's a disservice to their client, right? When the CPA and the advisor don't work together. So that's what we're going to talk about today, more of that, right?
Awesome. Okay, so let's just break it down for a minute. What does it mean, in-house CPA, and what is a CPA? And
in this house. Office.
It's a house. We're here more than we're home, except if you don't count sleeping, right? What is
down the hall?
Yeah,
exactly. That's where Clay is, right down the hall.
Across the
hall for me. I like it.
So what does that mean, and what happens? Well, first of all, I think that we want to talk about one of the things we always do on the show is give an offer, right? Something we can do to help our listeners. And we've been going deeper and deeper into stress testing portfolios, given the market's at all-time highs, given there's an election coming up, and there's lots of potential volatility and things that people are just straight up nervous about right now. So what we've done is we've really started using our Aladdin system, which comes through BlackRock, but we're able to stress test 30 right now different market-based scenarios on your portfolio to see what would happen if different outcomes from the economy, interest rates, all kinds of things. The election. So we can stress test your portfolio. So we want to be able to do that for you. So if you're interested in taking a look at your portfolio, what your advisor, if you have one, has done, or you want to just look at the portfolio you're managing yourself, we will run it through our stress test. But we're going to go a little further than that today too. Clay's said he's willing to have a conversation, a little discovery session with you as well, and we can then take a look at your last tax return and see if there's any opportunities, once we understand you, to find mistakes you made on your taxes or ways you could have improved and could have saved more money and help you prepare better for 2020 and beyond. So that's our offer. You get a tax planning review, you get a portfolio review, all bundled up in one. There's no cost. You can do that at financialdetox.com, or you can just give us a call at 877-707-8889.
No cost. You said no cost?
I did say that. Was I not supposed to?
No, I think we should expand on that for just a minute, because sometimes people hear these things and like, wait a minute, something that sounds too good to be true. They're going to look at my tax return and my portfolio and give me some free advice.
Right now, Clay's going, oh crap, Labor just put me through so much extra work.
Well, we did this a few years ago when we first started the show 4 years ago. We did the free portfolio challenge, we called it, and we I mean, dozens and dozens of people actually engaged with us to learn. I think it's important people hear and know the reason why we do this at no cost is it's part of how we get to know you anyways. Right. We're adding the tax component, which is new. We've never done that before.
Yeah, it's a great idea.
Because we can offer somebody else's tax services, but apparently we can offer yours. So.
Yeah, and it's worth it. Bring it all together.
Right. So that
it's how we get to know you anyways.
Right. And look, we have a RIA, that stands for Registered Investment Advisory Firm. We help clients from a full-time fiduciary standpoint manage their portfolios, create financial plans. So in the end, if we find there's a good fit between us, then we end up maybe working together. And if we don't, at least you got some value out of it. And as a listener to Financial Detox, then you win anyway. So. And we win because we get to help people, and that's the objective of Financial Detox. So one of the things that I've noticed is besides talking about Clay's golf game and my golf game, because we were going to have a conversation about that, but we'll skip that for now. We'll come back to that.
Wait a minute, I want to hear that. What's the golf game thing? Well, you beat him every time, right?
No, never.
Well, it's been so long. I've been waiting for a rematch, and he just hasn't been willing to do it yet.
Yeah, he always thinks he's injured or something's wrong with his shoulder or whatever, the labrum muscle.
Yeah, the labrum is torn. But so we're going to, we'll talk about the golf match here in a bit, because I think that's going to be good. We should have like clients get a free year's tax return if you can beat me in golf.
That's not happening.
No. Yeah, wait, no. If you beat me, then I got to pay for their tax return. Or if I beat you, you got to pay for their portfolio management.
No.
All right. Well,
I may be new to the show.
Yeah. we always try and get the new guy. All right. So listen, hey, before we get going again, why don't we take a quick break? We'll come back in just a moment, and we're going to talk about the benefits of putting the CPA together with your advisor, how we can help you there, and we're also going to get into some tax planning strategies. Right. We're going to talk about serious steps that our listeners can take to reduce their taxes, hopefully, for this year. That's the plan. All right, it's Financial Detox. We'll be right back. Thanks for tuning in. Hi, and welcome back to Financial Detox. It's Jason Labrum, your host, and I've got Alex Klingon-Smith, and we have a special guest, Clay Willits, Clay Willits is part of IDA Tax. IDA, as you know, we are the Financial Detox team at Intelligence Driven Advisors, and IDA Tax is now our in-house CPA tax preparation division that can help you and coordinate our clients' tax and financial planning and in portfolio management all together in a single spot. We've been having fun with this too, Clay, right? I mean, over the last, you've only been here a couple weeks, 3 weeks.
That's correct.
A month.
Yeah.
And we've had so many positive interactions already with mutual clients.
We have.
That we're starting to already see the benefits of this, including yesterday, a client in our office had lost their CPA, right? Had passed away, or one had passed away, or they got a new partner or something, and they didn't like the new partner, and so they were like, this is amazing. I get to come in, have one meeting, have my CPA in the meeting, have my financial advisor in the meeting, and bundle it all up. Pretty awesome, powerful stuff.
Yes, it is.
So we talked about, we kind of introed Clay. We talked about how I'm going to beat him in golf next time we play, and we talked about how
you talked about that.
I did. Only I did. That's right.
Okay. We'll just go with it for now.
Okay. All right. As long as he stays out, as long as you're out of the sand trap, you're going to be fine. That sand trap, okay, right? That's
been working on it.
Okay, good. But anyway, we introduced you, so that's great. But now you are going to help us just talk about end of year strategies, because we're getting towards the latter half of the year here, and this is the time to start paying attention to what you've done throughout the year, what you're tracking and looking like you're going to do for the rest of the year, so that you can make decisions to reduce your taxes. Right? Isn't this tax planning time?
This is definitely tax planning time, especially for those that have businesses closely held S corps or LLCs,
Yep.
or even sole proprietors, they're the ones that have the most opportunity to utilize tax planning strategies. Sometimes the individuals that are W-2 employees don't really have a lot of opportunities as employees outside of the employer's retirement plan and maxing their 401k or SEP out through their employer.
Right.
But the business owners have some real good opportunities that can be taken care of during the calendar year. So it's important that they get with the CPA in November or December to discuss transactions they might enter into for business purposes, such as purchasing a new vehicle, purchasing other capital expenditures that can be take advantage of bonus depreciation.
Right, like an airplane. Like we could buy a new airplane and depreciate the whole thing, right?
That's probably not on the list of most people,
Right.
but
you're a pilot. You were a pilot. You
certainly
were not
was.
only a pilot, but also a certified flight instructor.
I was for
I
many
know that.
years.
Yeah.
Wow.
Yeah.
Yeah.
Clay's the man. Flying.
Instrument, multi-engine, trained other flight instructors, and was hoping to get on with the major airlines. But in the 70s, with all the pilots coming out of Vietnam, the airlines really were not hiring civilian pilots. So it was back to school for me and an
CPA.
accounting degree, and I've never looked back. I love it.
It's amazing because now we're having a shortage of pilots, I think. Well, pre-COVID, right? It wasn't pre-COVID, there was a shortage of pilots. Unfortunately now, they're probably going to start laying pilots off.
Yes.
And now when you lay off a pilot, you have to lay off, what did we learn from our client? Like 4 more or 5 more people downstream get laid off for every one pilot.
Yeah, it's like a
because
team.
They all support them. But
Goes downstream.
so I mean, so you're talking about capital expenditure, spending money. You set a date, November, December. But isn't it important for business owners when you start thinking about retirement plans and starting a retirement plan, particularly a cash benefit, a cash balance plan, or a defined benefit plan, to start that before October? I mean, you kind of have an October deadline on those. So even now is a critical time to start thinking about that, because we find a lot of times that business owners, we just did one recently, a business owner, guys making great money, husband and wife making great money, no employees, and they were contributing to a SEP. Well, we showed them by using a 401k and a cash balance plan, 401k profit sharing cash balance combo plan, that we were able to take their savings from about $35,000 a year, I think was at the max, it's 25% of your income, up to
50 something?
yes, 56 or whatever it is. So we were able to take them, both of them, well into the hundreds of thousands of dollars. So 100 and change, I think it was 156,000 or something, tax deferred savings. And then we did the 401k part in the Roth, and we did the cash balance and stuff is of course tax deductible. But so, I mean, this is a game changer for them. 4 or 5 years of doing this changes the trajectory of their retirement plan. But we had to get it done by October, I think, is the date, right?
Yeah, I believe that's correct.
Yeah.
I certainly, don't practice as an expert in that area of defined benefit plans.
Yeah.
However, I believe you're correct, and really important also is the fact that you don't have to fund these plans by the end of the calendar year.
Good point. Yep.
And so you've got until the due date of the tax return, including extensions,
Right.
which means that can put funding often clear off to September 15th for businesses.
Of next year.
Yes, of
Yeah,
the following
that's a
year.
really good point. So you do tax planning is almost like a year in advance. You're almost thinking a year in advance, and you don't have to come up with the money right now. So that's a really good point, Clay, that we got to talk about. So these are opportunities where if we talked earlier about being able to blend the CPA and whatnot. So we do a lot of retirement planning. So it works really well for us when we get to go to you and say, hey, we're looking at this retirement plan. Now tell us from your expert perspective on, as a CPA, how does that really work? Are we missing anything? Is this going to really help the person? And I think that's a critical connection where even if your advisor doesn't have an in-house CPA, it's really important, hopefully, that your advisor is connecting with, because we have other CPAs we work with, and that our clients like those CPAs and they've been using them for a long time. And so we connect with those, open up the financial plan to them, share with what's going on, and create that collaboration, and it works out really well. So I think that's what we're getting at here.
What about mistakes, Clay? In your years of being a CPA, working with your clients and having clients that have advisors that maybe you don't connect with for whatever reason, what are some of the pitfalls that you've seen?
Yeah, I've certainly seen some over the years. I think one of the biggest is in timing capital gains and capital losses. And a good example, and I've experienced this, I had a client that sold some real estate and had a large gain in, let's just call it year one. Well, the financial advisor didn't know about this real estate transaction, and there were substantial unrealized losses in the portfolio of this individual, but they were not made realized losses by the end of the calendar year. So the bottom line is the taxpayer gets hit with the full gain in year one, and even if those unrealized losses are recognized in the following year, you can't take a loss and carry it back. And so they had to pay the tax on the gain. And let's just say this person doesn't really see any large capital gains coming to them for the rest of their life. Given that these capital losses that they failed to take against the gain, they now get at only $3,000 a year until they're gone. And so this person could literally go to that better place above, having capital losses left in their estate that will never be used.
Yeah, so big deal. Doesn't that circle back to, Alex, and make you think of just financial planning in general? Had the advisor done the proper planning, they would understand the client, understand what's going on in the client's life, would have been able to call the
right
CPA.
questions.
Right. All right, so we got to take a quick break. We'll be back in just a moment. It's Financial Detox, and we are talking tax. Welcome back. It's Financial Detox. I'm Jason Labrum in studio with Alex Klingensmith and Clay Willits, in-house IDA tax professional. So Clay, we were talking about a bunch of different things so far. You had a couple points that you wanted to talk about regarding the integration of advisors and CPAs, I think, or are we still talking about the mistakes that people can make? Which one was it?
Well, I think we're talking about mistakes that I've seen in the past, that if there had been a proper relationship between the advisor and the CPA, this would have been averted. And we've talked a lot about things that are advantageous to business owners, but for people that don't have businesses that are wage oriented, for example,
W-2 employees,
there are still things that are really important to avoid and make sure that you're communicating with your advisor. One good one is, especially in Southern California, so many people are getting solar on their homes. Well, this is a substantial credit. It was 30%. It's now at 26%. And of course, unless extended, those credits are going to expire at the end of 21. But my point is here on these credits is that in order to take a solar credit, you have to have a tax liability. If you don't have a tax liability, then the solar credit just rolls over year to year to year. So one of the things you want to communicate with your advisor about is, if you're putting solar on your home, you want to coordinate with your advisor, make sure that he can help make sure that you have a positive tax liability that's large enough to absorb that solar credit.
So that would be a great year then if you did that and you didn't have a tax liability, utilize those lower tax rates, maybe do a Roth conversion, right? Convert some money from an
Excellent.
IRA,
Yeah.
that creates
Exactly.
taxable income, but now you get to offset it with the solar, and now you have
Yes.
money growing tax-free in a Roth.
And that's a good point too, because I said you need to have a tax liability to use the credit, but if your tax liability is only equal to the credit, you're going to be down in low tax brackets, and you're not going to get much bang for the buck out of your solar credits.
Right.
And so, so it's a good
exactly.
opportunity to up the income in the year that you're going to have such credits, so that those credits are offsetting tax, at higher brackets.
Right, and up the income, you can do that by doing a Roth conversion. You can do a lot of 401k plans now have in-plan conversions. So you can actually convert money that's in your traditional 401k to the Roth 401k. You just have to pay tax from outside that, but that creates income. You can do a traditional Roth conversion out of an IRA into a Roth. There's other things you can do too with regards to if you have appreciated stock, maybe that's the time to take that capital gain on appreciated stock and so on and so forth. So there's lots of different tools that
Yes.
you can use when you combine together.
Yes.
When we were preparing for the show yesterday a little bit, it made me think that, and I've always wanted this, so I'm so glad it's finally happening for our firm here to partner with you, is the ability, what we do with people, with our clients, is we show them on the screen. We show them, okay, here's where you're at today. Here's what you said your goals were. The number one goal for most people is to never run out of money in retirement. That's a pretty big, simple thing to put your arms around, right? But to be able to have tax weigh in on what we show people is, what if you did all the things Jason just said?
Yeah.
What if you did this and this and this and this year, given your tax situation, and then we project it forward, and you can see it. It's green. Maybe we can put some art in here, some visuals on what I'm describing, but what if we did the Roth conversion of 50,000 versus 100,000? What are the benefits on your long-term plan? Like that's why you want to marry these two things together, because
Exactly.
without
Do a lot
it, you can't see that future.
A lot of sensitivity analysis where you can see the outcome of various decisions.
Exactly.
What if scenarios, and I'll close, we got to close on that, but I did a financial plan yesterday with a client. Running out of money wasn't the issue at all because they have plenty of money, but now it was optimizing my life, right? And that's where it shifts from people who are, trying to not run out of money, and a big contingency of our clients, they're never going to run out of money. But the thing is, like, my purpose, how do I maximize my purpose? Whether it's charitable giving, help my kids start a business, whether it's, just maximize my lifestyle, how much can I do without, so be able to see all those what if scenarios and the cause-effect relationship of those from a tax perspective, inflation perspective, volatility in the markets perspective, all that, a cause and effect relationship happen live on an interactive screen for you. That's what we can do. And now with Clay and IDA Tax, we can incorporate the tax aspect even more so than we have before in the past. So we invite you to take us up on our offer. That offer is a complimentary portfolio analysis and review. It's a full-on stress test review done by a very sophisticated system called Aladdin out of BlackRock, and we also will incorporate the tax review as part of that. So take us up. You can do that by going to financialdetox.com, or you can give us a call at 877-707-8889. Thanks for being here, Clay.
Thank you. It was a pleasure.
All right. Thanks, Alex, and we'll catch you next time. It's Financial Detox. Bye-bye.